What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the description below. There's a link to the Rawstocks Discord, where we're currently offering a 7-day free trial for premium membership. Also, there's a discount code to get 30 days free of premium membership as well. Offering all kinds of smart money concepts education. We're offering call outs for options, and we're also offering a great community of traders where we're all having fun during market trading hours and sometimes even after. Also a link to Traders Helping Traders Discord where I'm hanging out during market hours as well. Also offering some call outs on that Discord also, and then some other ways to support the channel. Also included in the description today is a link to the Unlocking Success in the ICT 2022 Mentorship, which is the book that we're currently doing book studies on. Both of those Discords for premium members only. So if you want to check out that book, I know a lot of people have been asking questions about it, want to know how they can get it. The link is in the description. So let's jump into the charts. Currently, you can see I have a nice clean chart here. I'm only running the indicator Smart Money Concepts by Lux Algo currently. On this chart, the only thing I have is structure listed on that indicator. I only have internal structure. I do not have swing structure. So that's all we're looking at right now. So you can see that, we've just been kind of fading the sell-off here. Saw a little bit of a pop yesterday, not enough to sustain us. We saw a gap down. We saw us trade down. We saw us set a new weekly low. Currently drawing on this liquidity wick right here. Also, we have a order block right here in this last down close candle before we rallied up. But I'm more interested in this wick right here. Looking for us to take that low. Okay, and whether that's this week or whether it takes a little bit longer to get there, I'm going to mark it off on my chart there. And we got that rejection wick. I'm looking for us to take that. Once we take that, we're going to see a change of character, which is going to be a bearish change of character if we do take that low. We could certainly just reject inside of this liquidity. But if you look at RSI2, we're pointed down. We look like we could be heading to a lower low. So I am really looking for price to come back down, take the low here, then maybe see us pop up somewhere back into this range right here, and maybe that 250 range, maybe this fair value gap that's right here in the mid to high 240s, right? But again, what I'm really looking for is for us to drop down. This could happen as early as tomorrow, right? Drop down, take the low. We'll see something like what we saw over here. This was a bullish change of character. We're going to probably see a bearish change of character when we take this low, right? And then I'm looking for a low to carve out or a bounce to happen, right? Then a pop back up. Really looking for price when it pops back up to, let's just say swing lows at this point. I want to see price pop back up to premium range, which is above the equilibrium of whatever the swing ends up being. And that's where an optimal trade entry could happen if you're looking to go swing short, over an extended amount of time, maybe multiple months. We'll be looking for price to come up to this optimal trade entry above equilibrium. And at that point, we'd be looking for price to come back down, maybe take the sell side liquidity here, maybe even take the 194 sell side liquidity even further to the downside as we see, again, RSI start to push price down. And if you were to throw up a moving average, you can see we're below the moving average, but that would also be in line with the potential pop back up, right? So again, maybe a quick dump down, take the low, pop back up, test the moving average, right? Above equilibrium, fair value gap. Those are kind of the indicators that we're looking for a swing short if you're trading the daily time frame. Okay, so let's drop down also to the 4-hour time frame. All right, again, still a high time frame chart. You can see we caught a little bit of a bounce as we pulled down into that rejection wick, which is also, if you look on the 4-hour chart, also an order block, right? And you could take the wicks or you could just take the block itself. But we got an order block there. We've drawn down into it. Okay, this could end up finding support where we could again rally up that rally up is going to take us again into the fair value gap right here, right? If we drop our simple moving average, right, we could pop back up above it and see that rally up. Again, we'd be looking for, if the bottom was already in, we'd still be using our Fibonacci tool. We'd be looking for short entry above equilibrium into the optimal trade entry, right? Your stop loss above the old high, and we'd be looking to target sell side liquidity in the old lows down here and down here. We also have a fair value gap here that could hold price as well. So that's what we're looking at on the 4-hour time frame. On the 4-hour time frame, we have seen a change of character already occur. And so a lot of times on the change of characters, no matter what time frame you're looking at, with the change of characters, you're looking for a delivery on liquidity, whether it's buy side or sell side. So here we had a deliver on liquidity, right? We had an order block here. We also had a large order block here. So we delivered up to buy side. Okay, we had a change of character. We had a fair value gap right here that we traded back into. So that would have been your short entry there. Now we're looking for confirmation of, a potential change of character on a 4-hour time frame that might lead us a little bit higher. If we get that, that'd be a break above here. We'd be looking for a displacement candle. We'd trade back into the fair value gap, and you could run a shorter term swing trade up to, again, those previous areas that we talked about on the daily time frame. So if you were looking to go long, that might be the look, right? We can see RSI kind of starting to bottom. We do have a bit of divergence. It doesn't mean we're not going to take this low out, but that's just what we're starting to see is potentially a bottom starting to form. That could have been today. That could be, tomorrow into the rest of the week. But we'll be looking for this, again, order block on the 4-hour time frame and the rejection wick of liquidity on the daily time frame to be drawn down and potentially taken. If we drop to the 1-hour chart, 1-hour chart showing us something similar, right? We've had all these break of structures. We did see a change of character here. And so if you were looking at the 1-hour time frame, the 1-hour time frame is going to be our high time frame if you're a day trader or scalper, but it can also be your low time frame if you're a swing trader looking for kind of potential premium entries. So here we did not see, we saw a fair value gap that got taken out. So the criteria for a trade setup, because we are delivering to the sell side, was not met in this change of character. So we would not be taking a trade as we came back down into this. But now we have another change of character here. So we've delivered down to sell side. If we pop up and we don't rally above this high, right, we might see a nice, more short-term entry, maybe, 1 week, 2 weeks on your contract. If we pop back up here, find rejection, maybe even in this simple moving average on the 1-hour time frame. Let's just let's adjust this arrow here. So let's say we do pop up into the fair value gap, right? We find rejection. We come down, we take that low, right? And then we potentially, see that rally up to like 250 that we were talking about. So that's totally a likely scenario, right? We might see RSI pop up a little bit. I've already seen it kind of bottom out here. So we could just see it straight up rally as price got above the 21 period. So we will be looking to see what happens there. But if you do like this fair value gap for a short entry and you do think that we're going down here, that could be a really nice scalp, a really nice weekly trade. So let's just take a look at what that trade would look like. I would want to be taking that trade if you were at least at the consequent encroachment of that fair value gap, right? So somewhere around there, I'd be looking to take that entry. And what you'd be looking for if you were taking that would be a short entry, and your stop loss would be above the previous high, and your target would be at least previous low. So you got a 1.32, not a great RVR. You could always try to move it up. Maybe we go all the way through the fair value gap and then continue to hold there. It makes it 2.27. Maybe you're targeting that previous low from that rejection wick in that 4-hour order block, right? So at that point, your consequent encroachment still gives you a 2-to-1, right? Or if you run it all the way up to the top boundary of the fair value gap, you got a 3.27. So a couple different ways you could try to take that trade if it's given to us. So we'll be watching that on the 1-hour time frame. Let's get some of these paths out of there, right? Some of this 1-hour stuff out of there. But again, also here, you could find 21 SMA reject us. Go down to the 15-minute chart. 15-minute chart shows a nice sell-off in the early morning. Kind of found support as we just kind of traded sideways through the rest of the day. We set a new low for the week on a Tuesday. Tuesday can sometimes be manipulation day, but it also could be that sometimes on Tuesdays we are looking for lows or highs of the week to be set on Tuesdays and or Wednesdays. So we set a low of the week so far, but we still could set a lower low on Wednesday, so we'll be watching for that. Again, on the 15-minute chart, we also have fair value gaps here. These do not quite meet the criteria I'd be looking for. We got to change a character here. Okay, but this is later on in trading session or early in pre-market trading sessions. So no opportunity to enter your options during that session. Then we get that sell off and we've seen a bounce from there. So on the 15-minute time frame, I'm not seeing anything I love right now. If we see a bullish change of character, I'll be looking for a displacement candle on the 15-minute chart and see if there's a trade set up there as well. But right now, don't see anything that I love. On the 15-minute chart, again, we kind of saw a sell-off into the end of the day. I kind of think we just kind of set up like a bull flag or a bear flag, a bear kind of wedge situation, right? Got a little bit of a triangle set up, sold down into the end of the day, looking for us to, again, run on the low, right? Maybe run all the way down to 229.41 or 230 and just test those levels. And, I think we're just kind of running and testing to see where we want to find our next level of support, right? So that price can then rally higher. Lastly, we'll drop down into the 5-minute chart today. You can see, again, we got that nice sell-off. This is all pre-market, okay? First candle, saw a big move up, big move down, right? Kind of clears out liquidity that's in this, in this kind of like congested consolidation range. Then we just sell down from there. Didn't see anything I loved on the 5-minute chart. No fair value gaps here. I will drop down to the 1-minute chart and show you all the potential trade setups that were available today, and we'll discuss them just a little bit. But on the 5-minute chart, we saw a bounce, right? No fair value gaps in here either. Sell down. See a fair value gap here. But it's not. It's still in the premium range after this move up. So I don't love that entry there in that fair value gap. Ultimately, sold down, and we just traded sideways. So lastly, we'll jump into the 1-minute chart. I was just going over the chart with another fellow trader, and I saw, a lot of different setups that were possibilities. So I want to go over those different setups with you. Okay, I'm going to take off the moving average because it's not a smart money concept and it's irrelevant to kind of what I'm about to show you guys. But when we talk about the elements of a trade setup, which we've been talking about since, the beginning of the year, the elements that we're looking for is a delivery on liquidity. We're looking for a structure change. We're looking for a fair value gap to enter in, and then we're looking for price to deliver to a liquidity target. Right, so if we look at those elements of a trade setup, and then ideally we want to take the trades, if you're options trading, we want to take the trades between 9:30 and 11 o'clock for our most premium entry, but we will look at all the different trades throughout the day using the same concept. Okay, so we delivered on liquidity to the sell side. We bounced up. We saw a change of character here, and we can see that there was a fair value gap here. And we deliver right down to the fair value gap. You could have taken your entry there. It was not in discount, but it's still a good entry. If you were also watching it, you could see a fair value gap there. So you could take your first entry here. You could average down here. You'd set your stop loss down below the old low. You can see our elements of a trade setup are met. Fair value gap entry. We ran on liquidity. There was a 1-minute bearish fair value gap right there. That's a liquidity target. And then there was a order block right here that we fell just short of hitting. Okay, so you could have ran that in different scenarios. You could have ran it just up to this if you wanted. Maybe you held, see if we could hit that order block. We came back around. Okay, so then the next trade, if you're just following the elements of a trade setup, we see a change of character here, and then we see fair value gap here. So the rules on that would be that we are looking then to grab price back in a fair value gap. But what you see shortly after is that we see another change of character. So that would negate this trade here. We would not be looking to take this as it moved into this fair value gap because we saw a new bullish change of character. So at that point in time, okay, we pop up, we come down, we see a bearish change of character, right? Because even though we saw this bullish one and it left fair value gaps, right, we then also saw a bearish change of character here. So that negates this one. And the next thing we're looking at is this change of character here. So move down, change of character, pop back up. We got a fair value gap right here. So if we take a look at that fair value gap, okay, right there, you can see price trades up to it. If you use your fib tool, you can see we came to optimal trade entry, right? In a fair value gap, you could try to grab either one of these. I like the fair value gap entry, right? Your stop loss is at the previous high. And if you took the optimal trade entry, you're targeting symmetrical swing, but then you're waiting for that to happen, right? We hit our first take profit, we hit our second take profit, we hit our third take profit. So you'd be closing out your trades if you had multiple lots. And ultimately, we do come back down and hit symmetrical swing, but if we're just tracking the elements of a trade setup, okay, we'd be taking the fair value gap and we'd be targeting old liquidity. So our old liquidity here would potentially be this order block right here. So if you were to map that out, we deliver into that order block, another successful trade. Okay, now we're 2 for 2 because these both were negated. So we traded this one and we are outside of that, 11 o'clock window. And so, there is the possibility that maybe we don't take that trade, but just showing you guys that this method works. Change of character, fair value gap, target liquidity, right? We delivered to the liquidity. Let's go ahead and then see another change of character here. Okay, but then we see some fair value gaps, but then we see a bearish change of character. So this one is now off the table. This one is in play, right? We come down, we see some fair value gaps. We say we might target them, but we do not see price trade back up to the fair value gap, right, in this bounce. And then we rally down. So we're not interested in this trade anymore because we get another change of character here to the bullish side. And so that one takes this off the table, right? There is a bullish change of character here. We rally up, right? We come back down into this fair value gap. We have not seen any additional changes of character. This is a good trade. The elements of a trade setup are there. We are outside of the optimal trading window that we want to look at, but we can still take that trade, right? So come back down, fair value gap. We take the long. We set the stop loss below the old low, right? Price rallies up, comes back down. We get a bit of a turtle soup where we kind of run on stops, right? We run down, we run up, we run back down, and then we rally from there. We deliver into liquidity, right? That's found inside this order block, and we have another winning trade. Right, we get another change of character here, but we're kind of running up against time at the end of the day. And so don't love that trade. We do trade up. We would have got stopped if we took that trade, right? If you weren't willing to swing it, if you didn't think we were going lower. There is a fair value gap right here. We would have traded into that fair value gap. We would have had stop loss here if you were just looking to scalp into the end of the day. And we would have got stopped on that trade. So no big deal if that was the case. But again, end of the day, not always looking to take trades unless you're willing to swing them. So if we were to have just counted the ones that were good setups that had not been previously negated, we would have had 1, right? We would have had 2. And we would have had 3 premium trade setups that all delivered to liquidity, right? So we would have been 3 for 3 on 100% trades if we just followed this method alone. And that was all on sideways price action. So hopefully this video has been helpful for you guys. Look forward to bringing you more additional content. Again, don't forget to like, subscribe, share with all your friends. We're almost to 500 members on the Discord. Looking forward to giving away, or on the YouTube subscription, looking forward to giving away a t-shirt. And then also consider joining premium membership. It's a month for free and there's a lot of value. And then past that, it's only $10 a month. So, we've provided, only one losing trade today that we got stopped out on. But other than that, there's been, all winning trades on all the trades that have been taken on the call outs on the Discord, on the Rawstocks Discord, for 2024 so far. So hopefully you guys will consider joining. And again, I'll see you guys on the next one. Good luck on trading tomorrow and take care.